Okie dokie. So, good evening, everyone. Just like I earlier pointed out, I had some important engagements today that needed me to start off early. So, that was why the class was shifted to this evening, and I'm glad that a number of us made it here. So, we'll be kicking off. Today's class is going to be quite short but very impactful. We'll be looking at how to approach the market from a swing perspective, okay? How to measure what your risk is in the market and how to expect your take profit levels, how to place your, take profit levels when you have made an entry. So without further ado, let's take a look at our charts. Okay, let's do that right away. Okay. Okay, so as we all know, once questions are being asked, I'll expect you guys to respond via the software's chat section. So if there is anything that you get confused, you key in your questions there as well. So here is our chart. This is gold chart. Now, for most of you, I've told you guys this earlier. Right here at the top right of my screen, you will see I only have a few currency pairs here that I do analysis on each week. Now, when you see me analyze all of this, I analyze it one for my clients, for the people that subscribe to me, and then I give them the signals, okay? But the currency pairs I myself trade is mainly gold and GDP JPY. So while you are growing in this journey, you should also find peace with maximum three currency pairs. This is very important. All right. Now, there is a reason why you need to do that. Currency moves from zones to zones, from price zones, key price zones to other key price zones. It could be above or below the current price at which it is. Now, the importance of knowing or understudying a few currency pairs to trade, one or two is even just too damn enough, right? Is you'll be able to have those key zones at the back of your palm, okay? So once price is somewhere, you know that, okay, what was this a drive? Is there any economic news that makes this market bullish or bearish? If there is any, all right, so what is the current price movement? Is it bullish or bearish? If you have answered that question, then you will know that the next zone that the price we're going to get to is the next key level. Okay, so what we are going to do today is how I approach the market from a swing perspective. Right now, I'm going to cut all the bullshit for you, all the intricate detail like the waves and all that. We have not yet got to that level, but what I'm going to give to you guys today should at least arm you to start taking some kind of trades come next week. Are we ready for that? All right, I guess the answer is yes. So let's kick it off. Now, I have a tool, okay? I have a tool here that helps me replay data, that helps me replay the market, even though it has already happened. So I have a tool that helps me back test, and that tool comes when you have a registered, like when you subscribe to TradingView, okay? Like I pay for TradingView for every year. I pay yearly because, of course, this is my um, profession, so I don't have to joke with it. So once you have a paid version of TradingView, one, you will see you wouldn't have all those annoying adverts that usually pop up on the left side of your screen, and you can also do what we call a replay, a back test. And it is that replay back test now that we're going to do and apply this method I'm talking about. So we're going to assume that this entire aspect of the market has not yet occurred, and we're going to take it all off on the screen, and then we now perform the analysis and see how effectively it works. Boom. As you can see, I have cut that side off. Okay, that part has been cut off. So we want to work with this data right now. We want to work with what the current market is telling us. Then we want to see how we can place trades. So today is really all about, in fact, get your pen and paper handy. All right. So you need to at least write down these steps that we're about taking. Okay. So the first step you want to take when you come to the screen is go to a higher time frame. What we're going to be talking about now is what I call the top-down analysis. Okay. Top-down analysis. Excuse me. Okay, good. So the top-down analysis. And what that top-down means is you come all the way from the monthly to the weekly to the daily to the 4 hour, then to that time frame that you want to take a trade on. If there is any terminology I use here that confuses you, please key it down on the chart. I'm going to attend to it later and I'm going to clarify you, okay? I want everybody to follow. I want to carry everybody along. Now, the very first thing we're going to do is we want to go to the monthly. As you can see here on your own trading view, if you click on this top part of the screen, you should see different time frames here. And what do all these time frames represent? It tells you how much time it takes for one candlestick to be completed. And of course, we know what candlesticks are from the previous classes. Each of these red and green bars on the screen are candles, okay? So right now we are currently on the 4 hour time frame. That means for each of these candlesticks here, it takes 4 hours for it to get completed. Now, what we do here is shift to the monthly. So right here now, we are on the monthly time frame. So what we're going to ask ourselves is, what is actually happening on the monthly? All right. So I want to clean all the previous key levels I've put here on the screen. Let me wipe the screen off so we can take a better look. So guys, I want you to look at this. What has the market been doing since 2019? The market has been trending up. I know we can see that very clearly. Market has been trending all the way up here. Very bullish since 2019, unstoppably, right? It's been moving all the way up. And then 2020, it reached a key level right here. On reaching this key level, it starts to drop. So we have to identify that turning point. So what do? Come to this particular tool, choose your rectangle tool, all right? And then mark out that key zone. Remember why we call it, why we are using rectangle is that particular level is not just a single price, it's a zone of price ranging from what? In this case, you can see the edge of this rectangle. If I click on the rectangle, you can see the edge by the right hand side. The price range from 1,971.56 to what? 1,990.22. So that is the area that this rectangle covers. That's what you want to mark out. So even while I have marked this thing out in this manner, I'm still going to use a horizontal line, okay? Put this horizontal line like this. So that is a very key level. Now, remember we are price action traders. We are studying what the price does. Do you understand? And it is from what that price does that we now take actions, because of course the data, the figures don't lie. Numbers, as we know, don't lie. First and foremost, the market got here. It moved all the way here, boom, spiked above it. Back in 2020, spiked above it, but failed to maintain that height above this zone. What did it do here? It fell back in below this zone, showing you that here is a very strong what? Resistance. I hope you guys still remember our resistance and support zones, right? Great. So we have this zone as a strong resistance zone on the monthly. Now, go back all the way from this particular time that it hit this resistance, it came down again. It came down all the way from here down here to this level at this 1708 level. And what happened? It bounced back up from here. So this too is another key level. So you mark it out. This is your assignment. What you have to do whenever you are you want to take a trade on a certain pair. And one thing about doing this exercise is if you mark out those key levels on the monthly, you don't have to always come to your chart to repeat dates. I hope that's understood. That's why it's important to have them here first. So I've marked out this support zone. I now have a range of price that the market has been moving since 2020 to what? This is since July 2020 to 2022 right now. So you see that since July 2020 till now, market has not moved and sustained this price above what? 2000. I hope that's clear. So it came here and then it's been ranging. And look at what it did here again. Boom. This 2022, March 20, this is 2 months ago. It pumped above here and the same thing repeated. Look at here. The same spike, the same shadow here. Price moved all the way up here. It wasn't sustainable for it. It pulled back in to stay below this particular zone. So what are we expecting again now? Look at the current candle, which is this current month. This green candle right now is the current month. So what are we seeing happening here? We have seen now that this price has also got here again. And if you look at it closely, it is already rejecting from there. Take a look at that shadow forming. Even though it's still strongly bullish, but we see some rejections here. So what are we expecting given what the data? Remember, we don't predict the market. We react to the market. Market has given us a previous data that each time it came close to this price, it pulls down. It came down here again, it pulled down. It came again here, it went down. It came up here again, it went down. So using that same analogy, we'll also agree that, okay, look at here. It came down here, it came up to this level, it pulled down and closed right here. Then this one was forceful. It pulled all the way up here. It didn't close that month above this price. What happened? It pulled down again below it. Now, what are we expecting again? This thing, on reaching here again, is already giving us some rejections here. So it is only logical for us to agree that since this guy has got here, that is also going to do what? Pull down. Unless it proves us otherwise. Unless it breaks here and closes this month. This month is, of course, quite early. Yeah. Okay, we're already in the middle of the month. Yes. So it's quite early, relatively though. But if this month, unless it proves us otherwise and pushes up here and closes here, that's the only time we believe that, okay, since it's closed above a resistance, that resistance now will be what? A support. Okay? That resistance will be a support. And what the market is going to do going forward will be, it will break up, retest here as the support, and keep giving us what? Higher highs and higher lows. Continue in its uptrend. But for now, this monthly zone makes us what? Sell biased on the gold. I hope this makes sense. So we are going to mark out these two key areas on the monthly time frame, right? We've marked out these two key areas. Excuse me. Great. So we're going to repeat this exercise on the weekly. We are now trying to find other key areas, key zones that are closest to the current time. I hope that makes sense. It will become clearer if we now go down to the lower time frames, okay? So what we are going to do going forward, let me clean up this screen a little bit so that we have some clean space right here, okay? Let's check this out. Okay, good. We only have the support and resistance now. Our screen is decent enough for us to proceed. All right, beautifully. Now, this is the monthly. We've marked out this zone and this zone on the monthly. We can actually add an additional zone here on the monthly, which is another one, this one here. Market reached that. Remember, this is a full month. So as market reached here, it pulled up. This green bar here, it reached here, it pulled up. So making this also another very strong zone on the monthly. I hope that makes sense. You see why we call it a range? This now is another strong zone on the monthly. So you mark it out, knowing that if market eventually comes down here at any point in time, it's definitely going to reject. So after doing this exercise on the monthly, I'm going to go to the weekly. Before I go to the weekly, let's add one more here as well. I see another one here. Check out these zones right here. The same pattern, the same analogy, the same technique. See rejections here, rejections here, rejections here, meaning that this zone right here is another what? Strong resistance zone. So what do? Mark it out. So we have 4 marked out zones right now on the monthly like this. We are good to go. We come down to the weekly and see how we can correct these zones to be much more precise. So going down to the weekly, what do we see? We see that those zones are actually spot on. Okay? Very much spot on. You see right here, this is a support zone. Market reached here, it rejected and pulled back up. We saw market come down here, rejection, it pulled back up, come down again, rejected and pulled back up. And while getting up here, it pulled back down. So we have support and resistance clearly marked out now for us. So we don't have any further adjustments to do on the weekly. What we did on the monthly held strongly right here on the weekly. What is our next concern now? We are going to move to the daily, okay? We're going to move to the daily, guys. This is where you now pay rapt attention. Now, on getting down to the daily, you want to mark another zone that traps the current price. Remember, you want to be able to know where the price is moving next, given your position as a day trader. So what is happening on the larger scale, on the larger time frame, only gives you a direction, only gives you an instinct. But what you are most concerned is the next 20, 30, 40, 50, or 100 pips that the market is going to make. Where is it going to go next? That is your ultimate concern. You want to capture those moves, right? So what are you going to do right now? What you're going to do is this. You come up here and go down to the daily this time around. Boom. Now, do you see what we have on the daily, guys? This is the current price. This is our zone. Now, I'm going to use a white line to distinguish these two. Okay? I'm going to use a white line to distinguish these two. So, the white horizontal line I'm going to use now is this. I see, watch right here. Let me change this color to white. Now, the white lines are the daily lines. So I see a resistance right here. Are you getting that? I see a resistance right here. And of course, I see a support right here. But guess what? This particular resistance that I have marked up here with the white line, what it shows me is there is another zone right above it that the market has made, which is the one right here. Check this out. Why is this zone important to me? Or even this particular one now that the monthly gave us right here at the bottom here. Why is it important? Because previously market got here. See the reactions here. See the reactions here. You see those rejections here and the reactions here tells you that that is another important zone. So you have reduced the movement of this market to two things now. One is either the market moves from this zone to this next zone above it, or it breaks this particular resistance that it currently has broken above and comes down where? To this next zone here, which we are going to mark out again. This one right here. Now, do you see how we have reduced our goals now from the big resistance and support zones to the smaller ones? The ones that we know that the market will get to and for us to capture our prices. See this one here. Now, you know why we marked out this particular one here? Because the market got here first. It got here. This green candle got here. What next happened? The red candle, showing you that it's a strong what? Resistance. The same thing was repeated here. You have a green candle, you have a red candle. It pulled back down. Then you have a green candle that broke above it and another one that broke, giving you another zone. This one inside here now is a zone. This inside here now is a zone. And the one we are most interested in now is what? This particular zone that traps the current price. And you guys can see the current price, the one that has this dotted green line towards your right, which is the 1966.585. Okay? So that is the zone that we are most interested in. Having analyzed this, guys, having done this, We are going to now move to the 4 hours. We now know where our targets are. Let me see if I can reduce this the rectangle that was coming from the monthly. Yeah, so let me make it a bit tinier since we are right here on the daily. So I want to make it look much more appealing. Great. So that is this for us now. That is what we need. What is the next thing I want to do now? I want to now come down to the 4 hours. My 4 hour is where I'm going to do my normal trend line analysis, because that is where your market will most likely respect the trend lines and give you the next target for your trades. So right here we are in the 4 hour candle frame. Let's first of all see what has happened here. What have we seen happening here? Market has been trending up all this while. Right from this bottom, look at the lowest point on the screen to the highest point on the screen right here. So we need to have a trend line that matched those two. All right, and you guys remember how we draw our trend lines. So right now we want to look at putting a trend line using our extension tool. Okay, so this is our extension tool right here, the ray tool. So I love that tool very much. Very, very precise in marking our trend line. You see up, down, up, down. So from this level I can actually move my trend line in this manner. All right, we can actually start all the way from the bottom, but remember the rules of that trend lines that we did earlier. And you see the last move right here. If someone draws his trend line in this manner, I would also agree with the person. This next one I'm about to draw right now, if someone draws his trend line in this manner, saying you had an up movement down here and the person starts here, then where is the next button that the person targets? This one right here. This is also acceptable. This is actually brilliant. All right, we can actually use this particular one, but both of them, remember that your analysis will now have to be based on the trend line that you make. And trust me, in as much as trend lines can be somewhat subjective, they give you amazing results so long that you drill it correctly. Now, what we have here is this particular trend line. We saw what the market, let's take a look at this. Let's analyze this a little bit. Market moved from this level, gave us a high, gave us a low, gave us a higher high, watch out, gave us a higher low. What were we expecting? We were expecting the market to do was give us another higher high since it was uptrending. But did that happen? No. Rather, it gave us a high that just reached here, which is a lower high. This is the first instinct that we're going to get that this market is about to trend downwards. Does that make sense? This is the first signal that this market is about to change its brilliantly moving uptrend. So having that lower high here now, see what the market has done so far. It has never broken that particular high at this level, at this particular level here, right? It hasn't broken it. And anytime soon, look at the market has been moving all the way down. And what did the market fall into here? We learned about this during our market structure. The market has been ranging in this particular case now. Is that not so? The market has been ranging between this zone. It gets up here, it comes down here, gets up here, and then most likely gonna come down here. So let's see how that's gonna play out when we place a trade right now on it. So what is really happening at this current time now? That is the ultimate question. Irrespective of the fact that we've seen on the major time frame the market is going down. Look up here, guys. On this microscopic level, market is actually trending up. Is that not so? Watch it. You had a low here. Boom. Then this low gave you a high. It now moved another one down here, giving you what? A low. Now, this low has given you another high, bigger high. Remember I say waves work like fractals. Inside this particular high I just drew now, you see that there are even highs, lows, higher lows inside of it. So those microscopic higher highs and higher lows now is what we are going to draw a trend line on, because small movements on them can actually give us as big as 50, 100 pips. As a matter of fact, if we measure from this zone right here now, from this particular line to this line, this is a whooping 162 pips on gold. Capturing that can make you filthy rich, can make you a lot of money depending on the lot size you are using. Okay, so what are we going to do now? We take up our trend line, we match here, boom, and then we put up this particular trend here. So this trend has kind of changed, so we're going to adjust it to the most current lower high in this manner, and then we adjust this thing in this form. Bang, and we have our accurately placed trend line. You now see that we are no longer concerned about the lows that were formed here. We are concerned about the higher lows that were formed here, joining this lower higher low and this particular one here, which also got this one, emphasizing that this trend line is an amazing trend line for us. So having these three positions now, we're about to attack this market. All right, we're about to attack this market. Guys, watch out. This is an important place. We want to place a trade now. Let us analyze what is happening right here on this 4 hour. Look up here. Market, watch, broke this level here. This is superbly green. This is strongly bullish. Watch, right here, you see this strong green candle. It broke here. What happened? On breaking it, another green candle formed, which tried to move down but got rejected. That is, the sellers wanted to push it down, but the buyers were strong enough to tell them, say what? No, we don't allow that. They pushed it all the way back up. Now, my expectation was this. If this particular candle that is currently forming now was able to break the high of this previous candle, this green candle, this next candle now, this green candle that formed, they actually form what we call a hammer in the market, okay? The structure here is a hammer. This particular candle here, the green one, is a hammer, showing you there was a bullish pressure pushing the price up. Unfortunately, this next one now is red. I'm not going to take any buys. Listen, I'm not going to take any buys until I see a break right here, up here. Once I see a break right here, in fact, I could actually put a buy stop right here, so that if price eventually comes up here and hits this particular price, it activates my trade. And guess where my take profit would be? My take profit would be exactly at this zone I'm at, because I know, coming from the analysis, that this is what a very strong zone that market is most likely going to reject. So I'm not going to start hoping and praying that, okay, it's going to move up to this next one. No, take your profit at the next zone that you have identified to avoid stories that touch the heart. All right, so what we do here now is you measure what your risk would actually be. This is where you now calculate, will your risk be commensurate with the reward? First of all, what will my reward be? What will my potential reward be if I were to take a trade from here? From here to here is about 83, 77 pips thereabout, which is beautiful, right? So I need to see how this candle ends and how the next candle ends for me now to take a trade here. I hope that makes sense. So what do? We now wait. This is where patience becomes a virtue. I want to place a trade. We've seen the analysis we've done so far, right? However, if I want to take a, remember that I said that if I want to take a buy trade now, excuse me guys, the light is off. Let me just turn on my generator. Our dear NEPA guys have done their magic again. All right, let's turn the generator on, please. Okay, I'll be going on while the generator is turned on by my boy. All right, guys, let's proceed, please. So this is where patience calls into action. And my trades, I usually take my trades on the 30 minutes or on the 1 hour time frame. All right. So what am I going to do? Boom. I switch to the 1 hour right now. Watch what is happening here on the 1 hour. Does that make sense? Okay. Sorry guys, I'm a bit distracted. Let the light get on before because I'm working on my workstation, guys. So the power storage has not really been properly charged, so it might just get off anytime soon. I'm not working on my mobile laptop. All right, so great. Let's see what we can do now. Look at the 1 hour here, guys. This is beautiful. See what is happening on the 1 hour. Now, do you see that on this micro level, the market is actually moving down? Watch here. A high was made. This is important for us, guys. This is high. This is a higher high. But guess what? It now came down here. Boom. A lower high, another lower high. So I can put it to you that the odds of this market going higher is actually low unless you now have a trend line in this manner from here connecting this current. But like I said, for us to actually take a buy trade, it needs to break up here. However, for us to take a sell trade, it needs to break here. Let me mark out the zone right here. For us to take a sell trade, it needs to actually break here and of course break this trend line. So let's see what happens. Which one of them is going to happen now? Let's push it forward. Market is actually coming down. Do you see? We see it going up. Is it going to break our zone? It's still moving. One zone is broken. It hasn't. Beautiful. Now watch, guys. What did I say? If it breaks here, we are in our trade. So market is moving mightily up now. So what am I going to do now? I'm going to place my trade right here. I'm going to place a long trade. This is my long trade. This is my target. Okay. And then my stop loss is going to be at the bottom of the previous candle to the candle that activated my trade. So let's see, did this candle activate my trade? Boom. I think my trade was activated here. So this is where my stop loss is going to be, somewhere here. So let's see what we're going to get. Is it going to move? It moved down, it pushed up. Are we going to get a break? Let's see what's happening here, guys. We are inside this trade, though. Remember, you see where I placed my stop loss, how it came down here and respected it. This is quite technical. Let's see. Now, I want to tell you guys something. If I'm on a day trade, let's see how long this trade has actually lasted. This is where I think our trade was activated from here to here. This is like 13 hours, right? This is like 13 hours. It's not worth the time for me. Currently, we are at a loss. For myself, if a trade keeps trailing like this at a loss, it is not worth the time. I take that small loss and reposition myself. Are you getting it? But let's see how this trade eventually turned out. Let's see how it turned out. Good. Let's see if it took us out right here. Okay. It hasn't yet taken us out. It's still ranging and boom, we are out. One loss on a trade, guys. But guess what? Remember what we said earlier, guys? If it breaks here, what will we be looking for now? A sell. If it breaks here, what will we be looking for? A sell trade. Let's check that out. We have that break. Then, if this particular low is broken, guys, we are taking a sell and our target will be right here. So let's see how that happens. It's still going up. Guys, what do we observe here? Remember that our sell stop was here, just like we had here. I hope are we following this, guys? Remember our sell stop was right here. I say if it breaks here, we are entered. We are right in on this trade. Our stop loss is right above the previous candle of which this trade was activated. Now, I want us to check something here. If we had placed it... Okay, guys, I apologize for that little hiccup. So let's proceed. Remember where we were? We said that if the market broke this low, we'll be in the trade, right? That was what we were looking for. And we say our target will be where? Around that zone This particular zone now will be our take profit, and our stop loss will be what? Right above the previous candle. And if this candle moves, in fact, in our next class, when we start talking about risk management, okay, we'll see how we can be adjusting our stop loss, how we can move our stop losses to break even. All right, it's better for a trade to end at a break even than for it to take us on a loss. For instance, we saw a lot of opportunities for us to get out on this trade that we entered there safely, right? It went down, it broke here, it failed, it went down, didn't hit our stop loss, it came back up, went down, came back up. At least this was an opportunity for us to live with zero loss instead of letting it go down here. Remember, we talked about this earlier, that we're already out of this trade, but we wanted to see how it ended. Now, we had this trend line governing us. Market broke down here, moved up, and then we said if it breaks this particular zone, we'll be entering this trade. So how did it go? Boom. It pushed back up. Woo! That was crazy. That was really crazy. That was crazy. By how many pips did it make here? From here now to somewhere around there, that was about 52 pips. So a market has moved in your favor by 52 pips. The worst it can do if you did not take profit, guys, is to move your stop loss, which was up here before, to break even. I always tell my VIP students, guys, that this business is a business of risk management. It's not a business to know that you are a pro. Do you understand? Forget that. You see a lot of people posting sniper entry. We did all of that. But market will show you pepper. Then you will realize that you are not here to please anybody. That you enter the trade, immediately you enter and start moving in your direction. No. You are in the business of managing risks and making money. It is the money that you're going to show me. It's not that you have a sniper entry today and tomorrow you are in a huge loss. So I want you to have that at the back of your mind. Market has moved massively. What would you do? This is where you entered. You move your stop to this level right here. If you did not take that 52 pip profit. And why wouldn't you? Because if you look at the back, if we had adjusted this particular zone here to this candle, look at where we have these zones here. You would have seen that it was actually right. Remember that this was the right zone, exactly when it touched here. What zone am I saying? Let me mark it out for you guys. This one right here. You would have seen that this is where you pushed, you would have adjusted it, and not to be greedy to have it come all the way down here. Right? But remember, from our top analysis, we are what? We are bearish biased in the market right here. We are bearish biased in this market. So what are we going to do next now? Let's see for another opportunity. If this market makes a low, again, that means we'll be taking our trade. All right? So let's see what happens here now. Will it break up? That was a crazy one, guys. To be honest, I wouldn't be biased on this trade unless it breaks here for me now. I'm not going to be looking for buys here again, like anywhere around here. I will only be looking for buys if it breaks up here. However, I'm optimistic that if it comes down again and breaks this level here, my brother, I will be taking my sells comfortably. We now have to do that waiting period again. Let's see what happens. Remember, that was a strong zone. A strong zone. So what is happening in the market? We have a break. Guys, watch it. Beautiful. I want to take this thing back here now for you guys to see. I want to take this thing back. Watch this thing closely. What did I tell you guys? I'm looking for buys whenever it's only above here. Anything happening here is not on my own. This thing, guy, this candle right here was the one that broke these previous highs. Watch it here. Look at the previous highs. Does that make sense? Now, I'm going to allow the second candle to end because there's something in the market we call a fake out. I'm going to type it here. You can look it up. It's called a fake out or a fake breakout. We call it a fake out, which is short form for what? Fake breakout. Okay? You have to be mindful of these terminologies. What a fake breakout does is this. Take a look at this. You have a line here, which is a resistance zone. This was the candle that broke it. Remember the previous candle that tried breaking it came back in. But this one strongly broke it. Isn't that? Isn't it so? But if the next candle, if it were to be a fake out, the next candle will be red. The next candle will fail to break the high right here. The high of this candle, the next candle will fail to break it, and it will become a red that will close inside here again. And if it closes inside, it means that the candle will now continue coming down. However, if the next candle after the break of this structure right here is a green candle, there is a high probability, this is a business of probability, there is a high probability that the market is going to continue to go up. I hope this makes sense. So what we do now is we wait for that next 1 hour candle to happen. And look at it, guys. It broke the high. Sweet. It broke the high. And on breaking this high, you are now comfortable that the market now is most likely going to move to the next zone. So I want to find that zone where I should likely put my take profit. And that zone, as we see, is this particular white line here. And remember, we drew this white line on the daily. So I'm going to look at it. I'm going to try to go to the 4 hour, compress this white line, and see if I can adjust it further or whether it is actually good for me. I think it's actually good. So what I'm going to do is I'm going to have it somewhere right here, which is a very amazing zone. I see candles here. So whatever happens, I know that I'm in this trade and I'm going to take a trade right now on this particular candle. And my take profit should be what? From this particular place that it is to this place, which is around 53 pips. All right? Let me zoom the market. Let me zoom it all quite up right there now. Watch this closely. We are in on a trade now. Let's check it out. Long position. Boom. We've taken the position. And right now, believe you me, my stop loss will just be below this current candle. It would have been below this previous, but this is massively pumping. So I'll put it below this current candle, but making sure that it is below the what? This particular line that I drew here. This range right here. All right? So where is the take profit? Right about this zone right here. So let's see how the market played out. Woo! That was a crazy one. That we hit our take profit. Guys, do you see that? Isn't that amazing, guys? You see, we had a drawdown here. We had a drawdown, but look at where our stop loss is. Just a few pips to our stop loss. But because we know that this zone is strong, if it had broken this zone, it is what? Over. It is going down. But it failed to break that zone. That is why I tell my people that knowing where to place your take profit and your stop loss is a skill in itself. You might be correct, okay, market is going to go up. That's why there is a difference between one who is an analyst, a forex analyst, and a forex trader. Very huge difference. I've had students that were good with Elliott wave. They will analyze and tell me it's going to go, and it does go up. But when I start, in fact, maybe I'm going to show you guys one of it. I have my students who submit reports. I think most of you who see my WhatsApp status see that they still do that. Like a student of mine that made a profit of $2,000 plus just this past week. You give me your trading result. I'm going to access my email. All right. I'm going to show you guys one of my students when they were learning what their result looked like. And another one who was a good analyst, but I asked him to be placing trade, putting stop loss. Lo and behold, he was doing badly until now learned the discipline of trading. Trading in itself is a different ball game. That's why you need a mentor. A mentor to know that this place you place your stop loss is the right place. And a mentor to tell you that you need to be confident enough to hold on to that trade and not to have fear like a chicken-hearted baby. Just because you had this little drawdown, you'll be like, oh boy, it's very close to my stop loss, so like I jabba. Good and fine. If you had calculated your risk well, you would have been at peace with your mind that, okay, this is just 1% of my account. If I'm losing this, I'm losing only $100 or $1,000 out of all my account. And since my strategy is, let's say, 70% accurate, that means I have 7 more trades to win out of 10 trades. and I have a good risk to reward strategy. Definitely, all in all, week after week, month after month, I will be turning out a profit. That is the definition of a profitable trader. And in this particular case, you saw it happen. Boom, what do we have? Getting that drawdown, it moved up and it hit our take profit. Now, guys, look at that price action there. You saw immediately our take profit was hit. What happened? A swift pull down to show you that it has hit a very strong zone. Let's check out what the market did afterwards. You see, it went down. Isn't this exciting, guys? Isn't this beautiful? Now, do you see immediately that our profit was taken? Markets now change direction. And you see, on breaking this zone, like I told you, market has actually changed direction. Now, let's see if it properly break this our trend line, and then we'll now be on another trade on a sell. Let's see that. Will it break our trend line properly? Perfect. Guys, check it out there. We got a low here, and if you guys have not really taught you guys my strategy of entry, I'm just showing you this for you to actually start playing with the market next week, following just trend lines and this method that I'm showing you. And if a market has given me this zone here, this is of course another zone. I would have placed what we call a sell stop. You guys can, I've been naming some terminology here. If it doesn't, if you are not very clear with it, you can look at it. Aside from market executions in the market, you have different types of placing orders, right? We call them pending orders: buy stops, buy limits, sell stops, and sell limits. All right, you have those different types of order placements in the market. Now, what we want to do right now is okay, I'm just gonna write it at buy limits, buy stops. Okay, you can just do a quick read on it. Sell limits. I think I've thought about it here, but just as a refresher, then sell stops. Beautiful. Now, if you had missed this opportunity, you know that market is now strongly bearish because all these important zones have been broken. Watch this zone. You had this zone here, you had this zone. So what you need now is a little bit of correction upward, possibly a break of this zone, and you are entered a sell. We are no longer buy biased, we are sell biased now. If market is gonna go up, let it go up without us. We only become buy biased if this zone is broken. If it comes back to this zone, like this candle right here now. So let's see what let's see what the market did afterwards. Look at it here. We had some corrections. Do you see how it respected that zone? Now, if this market breaks this level here, you see the support that it has formed now, this candle, guys, we are in on a sell trade. Are you getting it? But we don't have what I call a free traffic here, but we can make do with this zone. This is where we're going to place our take profit, okay? Right here. So if markets want to move down again on breaking this zone, if market want to move down again on breaking this zone right here where we'll be entering our sell trade, trust me, the next level is going to get to before it breaks or takes a break. It's just this level right here that I've marked. And how much pips would that be giving us? Let's check it out from here to here. That is a whooping 41 pips. So let's see if market will trigger our trade. In fact, we can actually place a sell stop right here. We can just take our trading tool and place an arbitrary sell position. Remember, this only sell will be activated when the market does what? Comes back down. And if it comes back down, whatever candle that precedes the candle that activated our trade, above it is where we place our stop loss. So let's see what happens here now. Will it be activated anytime soon? We need a break here for it to be activated, a break at this level below. So let's check out. Has it activated? I think we're about getting out beautiful. We have activated our trade. We are in on this trade now. Will it go in our favor? So what candle are we placing the stop loss on? Somewhere around here, above this zone right here. So let's see how the trade now works out. It pulled back up. Is it taking us out or is it breaking the low? And our trade has been done. Guys, do you see that? Our trade was hit. Look at that. I'm already out on this trade right here. Do you see that, guys? Let me get it back again for you to see very clearly. Let me get it out. Where do we say our take profit is? Around this zone. Look at it where I marked it. Now look at how this candle came down to very close to that zone. On coming down to this zone, guys, you know that you don't jabber from this trade. Sorry, we didn't adjust this. Remember we said it earlier, we didn't adjust this. This was where this thing is supposed to be. We marked here, break here, activate us, come down here, take our profit. And this is exactly what you did. And if you had hesitated in taking profit here, what happens? Watch out. Watch out. It came down and boom, it takes you out on a stop loss, on your stop loss. You see how you have to be quick in taking trades. That's why you see some people, they will show you trades. That's why I say, show me your figures, right? You will see some people will be like, oh, I'm a boss. The trade is going in my direction now. I'm making so much money. And they will still, in fact, I had this. Remember, guys, I help my students get a funded account, okay? I trade a funded account. There's something called a funded. If you don't know about it, go read it up. It's an amazing way to help fund good traders. If you think you are so fucking good in trading, go try a funded account, pass it, and come show me. Right now, my company, what we are doing now is to help fund Forex traders. If you're able to show us the results, we help you, fund you with about $10,000. You trade, and the company and you will be splitting the profits. Use it, get your own account, and getting your own account from your own proceeds. All you're expected to be making is 10% per month. That's all. 10%. If you are giving 10,000, just make 1,000. Nobody's asked you to go and flip accounts in one day. That's bullshit. All right? So, when you are trading a funded account, like I had some guy I gave a test. Maybe I will redact his name and show you guys maybe on the WhatsApp. He's a good trader. He came to me, he's a good trader. He wasn't my student. I gave him assignments. And I was monitoring it. This guy was, in fact, I needed him to make $800 on the account. Just 800, 8%. Guess what? He was on an AUD USD trade. This trade, when I opened it from my own end, it was already on $615 profit. Guys, do you know the annoying thing here? The most disappointing thing is that all those trades ended at a loss. Guy, I was mad. I told the guy, this is not the way to go about it. Even if, okay, you were too stubborn to take profit at those levels, why haven't
Yes,
you moved your
I
stop loss to
sorry
break
if I'm
even?
permitted
You let it
to
go
use a
against
voice
you. Not
now.
only did it go
Okay,
against
thank
you,
you.
wiped out all those profits that has been
Well,
made and
I
still
don't. This
dug
is the
deep
first
into
time
your
I'm
stop
joining
loss.
your
That's
class,
bullshit, man.
and because of
That's bullshit.
sorry,
That's not the way.
because
That's
of
not
my
the way
tight
to go, right?
schedule, I've not been able
So,
to
guys,
watch the
let's move
previous
again. I'm gonna take
video
one more
you shared
trade
on
here,
WhatsApp, but then
and
I think
then
I'll
I
still do
believe
that.
this
So
concept has just
basically,
been
I'm
driven
kind
home.
of
So
confused.
let's see how the market will
Well,
react. Now, this time around, guys,
I
what
mean,
is my
the terms you are
stand now?
using,
What
particularly
am I
because
looking out
I
for
know
to
I've
take a
been
trade?
doing
I need
a
a
kind
trade to
of
break these zones. You
pseudo
see, a zone has been
trading,
formed here, a resistance
crypto
zone,
trading. So,
and another one has
and
been
I
formed
know
here,
when
a support zone. Is that also?
the
And
market
this
or kind
zone
of
for
the
me
candles are going
is what
down,
I call a
that should be the
no
best
trade
time to
zone. Okay,
buy
this is a
and
no
then
trade
sell
zone.
when it's right.
And since this
But
zone,
here,
this small
from
zone
what
here,
probably I didn't
it's too small
understand
a profit, it's too
very
small
well.
a risk for
I
me. I'm not
mean,
going
I
to take a
think
trade
it's
here.
kind of
So I'll be looking
opposite
for sales
from
when
what you
market
were
breaks this
explaining.
zone, so that my target should be somewhere around here. And I'll be looking for buys. Like I said, let me see if there's a clean traffic here. Yeah, there's quite a clean traffic here, so I can actually place a trade here from here to here. So if a market closes up here, retest, I'll take a trade on a buy and move it until it gets here, ride it till it gets here or close to that place. I take my profit. And all of this area, I'm not going to take a trade on until it breaks below here. So let's see what happens afterwards. Market has broken. Wow. Guys, do you see that thing I tell you guys? Do you see that thing I called a fake breakout? Do you see a fake breakout walking right in your eyes now? Do we see that? Watch out here. This candle, you see all these other candles we are rejecting here, right? You see all these other candles we are rejecting. What happened? This candle broke it up. Boom. So normally it was supposed to continue moving up. Is that not so? I said whenever you have a breakout, wait for the next candle. Is that not so? Wait for the next candle. And remember that we are what? Bear biased in this market. We are more concerned in taking sells than in buys. And look up, guys. Look at immediately this zone was broken. Remember that this thing that is happening abruptly like this won't be happening if you are watching the trade in real life. You will have the opportunity to actually take a trade just below this zone. And guess where this candle actually got to? To those close to that zone that we marked out. Let's see what happened again. Look at it, guys. See our take profit hit. And immediately it hits this zone. What happened? It pulled back up. Guys, trading is exciting if you know how to do it. Look at the trades. We did this analysis before this candle pulled in. And look at the results here. Look at that zone that we marked out. That's exactly where the market touched our profit. And how much profit would we have made if we had actually taken this trade right below this zone, below closing of this zone? Boom, from here to somewhere around here. This is about 100 pips, a whooping 100 tips. And if you are taking this trade with one lot size, which is 10, that's $1,000. And most of you must have seen my trades, my quick scans. I go 5 lot size, 3 lot size. So if I were taking a swing trade on this, on a 3 lot size, that's $30 per pip. That's about what? $3,000. Easy peasy. But it's what you have to actually learn and master how these things are done. Now let's move the market a little bit and see what happens. See, we are now raining all the way down, guys. You see that? We are raining all the way, guys. Remember now that we have a correction happening. And if this correction breaks, we enter again down. And that is just it. I believe you guys have actually learned something today about following trades. First of all, know the zones. You need to understand where your buyers are, know where the price zones are, know when to take your trade, and know where to place the stop loss, such that if your stop loss is actually hit, it means that the trade must have changed direction. So this is just what we have for you guys, to at least to start giving you a tiny little bit of text into how the market works and how to expect the trades to go, right? So
Yes, yes.
this is where we'll actually be calling it a day for today. I don't know if anyone has any questions. I'm going to look at the chat now. If anyone has any questions, you have something to talk about, to ask, to say, this is your time to do that right now. Let's check out the chat screen. Okay. Okay. Yep. All right. We don't have anything on the chat. So any questions? Was the class well understood? Any challenge? Does anything sound confusing? Was there anything that you didn't understand you want to ask about?
Yes, sorry if I'm permitted to
Of course.
use your voice now. Okay, thank you. Uh, well, this is the first time I'm joining your class, and because sorry, because of my tight schedule, I've not been able to watch the previous videos you
Okay.
shared on WhatsApp, but then I think I'll still do that. So basically, I'm kind of confused with the terms you are using.
Okay.
Because I know I've been doing a kind of pseudo trading,
Okay.
future trading. So, and I know when the market or kind of the candles are coming down, that should be the best time to buy. And
Okay.
then sell when it's right. But here, from
Okay.
what probably I didn't understand
Yeah.
very well. I think it's kind of opposite from what you are
All
explaining.
right.
Yes, it's
Someone asked,
yeah,
this
I
is a
think
brilliant
I'm
question. First, I'm going to
being
say two
cleared now,
things.
but I think
The
you
first
also
thing
kind of
is,
made
one, go
an
watch our previous
interchange
videos,
of the
okay?
term
At least
buying
to
again
understand some
and
of the concepts
selling.
and terminology. And
Sorry.
secondly, this is one of the biggest mistakes. Remember,
Yeah,
guys, I trade
because
crypto, all right? And I
yeah,
trade it massively
because
well.
I think my
Now,
confusion it's
see the mistake most people do.
uh yeah, the buying time
When
and the
market is
selling
falling,
time. Now
they
you're
thought
like
that is the
when you
right
drew
time to
the
actually
weak
start
field,
buying,
all right,
right?
the weak field, you're
Guys,
like
I want you to understand that's a big fallacy.
you wouldn't buy at
When market
that
is falling, allow
particular
it to
time.
be falling.
But previously,
Unless maybe you're trading futures, I can actually trade it
yeah,
falling, right? Now, if market is falling, remember that there's something we call
exactly,
inertia. Those of
exactly.
us who are engineers, right? This
Yes.
thing called inertia happens in everything in life.
Yes.
And if something is moving, right, it keeps moving unless acted upon by an external force. Most people will be like, okay, market has given a dip, it's time to buy. And they buy the dip, and the market now gives another dip. Like I have, if I go to my WhatsApp now, a lot of people are saying, Mr. Bright, please, should I buy Luna now? Luna is going down. It has dipped very well. I said, chill out, because I've said Luna as a company has crashed. People don't know about that. People that don't do the digging. Just buy your money. In fact, one of them disobeyed me and he bought $700 worth of Luna. $700 is $30 now, my brother. Hey, it's funny. That's the kind of thing that happens if you disobey what I said. Now, coming to what you say, when the market is falling, you see a massively red candle. It means that the sellers are still in the market, bear pressure. It is not the right time to buy. You have to wait until you see, depending on the time frame that you are. Are you in the 1 hour time frame? Are you in the 4 hour time frame? Are you in the 1 day time frame? All right. And this time frame will also give you an idea of what you are expecting when it starts going up. So if you have a red candle, let's go for instance, a red candle, first red candle on a 4 hour time frame. Please don't buy. You have a second red candle on a 4 hour time frame. Please don't buy. Then the third candle now ended as a green candle or ended as a doji. A doji means that, look at a doji here. Let me draw out the doji on the screen. A doji looks something like this, right? And every candle bears a message. That's one thing you guys have to understand. This is what a doji looks like. This one now is more like a hammer. A doji actually doesn't have a real body or a very negligible real body. This is a doji. Do you understand? So what this thing means is that the sellers actually drove this price down to this level here. But guess what? The buyers fought back and pushed it up to this level, eventually making it to close up here if it is a green doji. What does it tell you? That there is a high probability that the buyers are taking back power in the market. Does that make sense? Is this getting clearer? Take for instance, this is what happened here. Look at this round candle. Red, red, red. And guess what? We now have a green. Exactly, this is like a hammer. It is at this point that I will be confident to be like, okay, if the next candle comes and breaks the high here, I'm entering this. I am buying. Are you getting it? I am buying. And if I had bought immediately here now, you see that the next candle actually closed green, giving about what? 13 pips in this case, which is not too big because the predominant force is still down, right? Now look at this candle now. It came down and ended red again. Should I buy again now? No. I need to see a sign of life that the market is about to go up before I buy. And even at this point, you see that the market here has actually broken a support before. That means there is a much higher probability that it's going to continue to go down. If it's not going to go down much further, I'm very certain that it should actually go down to complete. There's something we call candle fill, wick fill. I'm going to type it on the screen. There's something we call wick fill. Wick fill. That means the price is most likely going to go and test those previous lows that it had. That is, this red is most likely, or the next red, since it has broken this zone, it's most likely going to fill up these wicks that we have here. Let's see what happened if that actually happened. Boom, guys, check it out. You see, it went all the way down. That is it. That is just it. There are no two ways about it. It went all the way down. All right, I hope this answers your question, bro.
Yes, yeah, I think it's clear now. But I think you also kind of made an interchange of the term buying again and selling. So
Okay, okay, come again.
yeah,
Buying and selling. Okay.
yeah, because I think my confusion is
Yeah.
uh, yeah, the buying time and the selling time.
Okay.
You're like,
Yeah.
right? The weekly, you're like, um, you wouldn't buy at that particular time,
Okay.
but
Remember,
just
okay, let me clear this. I think maybe this is where we're having the misunderstanding. You buy with the anticipation that price will go up. You sell with the anticipation that market is gonna go down, right? Does that make sense?
yes,
Good. So during this level now, during this zone, market has already pulled down, pulled back up, meaning that there is some forces driving this price up. It pulled down again and pulled back up. There is some forces driving it up. So my expectation here is actually I wanted to see more move up. But you don't control the market. That's what you have to know. But what will actually make me buy is because I have seen this. This is a sign of strength that the buyers are doing what? Taking charge in the market. So this is that sign of strength that will now help me once I buy. Mark, in fact, that's why many a time I hardly have very little drawdowns in my trade. That's a fact. Once I enter, about 70-80% of the time, the market begins to go in my favor because I know the right time to enter. Not when it is drawing down here, like most people that are claiming maybe sniper entries and all. If it is moving down in this manner, they'll be like, okay, buy, buy, buy. They will buy it and then they'll see this pull up, they will be happy. Now, what will then next see? Boom, the thing now draw down red again. They begin to cry. Do you understand? So you want to wait until that power has changed hands, until you see a green sign. And this green sign comes with several patterns which we have not yet treated in this class. We are still looking at some of the subtle candlestick patterns. There are a lot of patterns here. We have what we call the triangle pattern. We have ascending triangle, descending triangle, and the symmetrical triangle, right? Then we have other patterns. We have what we call a flat pattern. Do you understand? So all of these patterns help you. You have zigzag. They are right here on the screen. Whenever you see such patterns, it gives you an insight to what the market is about to do. If I quickly look at, like, some people are panicking now on BTC. If I tell you the analysis I've done in BTC, BTC has actually completed what we call a flat pattern on the higher time frame. If I go to the daily now, if I go to the daily, yeah, people are panicking and all of that. Yeah, I know. But chill. Let me go to maybe monthly. I think monthly is gonna give that to us. Beautiful. Now, check out, guys. What BTC is actually doing is a correction to this massive move that we had here. Are you getting it? Now, this massive move, remember what I told you guys from the very outset of this class. Whenever you have an impulse, what do you have? A correction that goes what? Impulse is going in form of A, B, C. No, sorry. Impulses go in form of what? Wave 1, 2, 3, 4, 5. Giving us a full what? Fledged wave. A super wave of wave 1. All these 1, 2, 3, 4, 5 are like the fractals, the sub waves of the super wave, right? Then when the correction begins, correction moves in form of what?
Yeah,
A, B, and
what
C.
I'm going
After
now,
it completes the C, you now get another
I
wave,
don't have
massive
questions
wave that comes
because
one,
I
two,
always
three,
have
four, five.
a review
In that
after
manner,
the
that's how
lecture,
wave. If we start going deep, in
and
fact, that's
during my
what I usually
review, I
give
put
to
up
my VIP members, so you understand the
questions.
markets
So
in
maybe
and
when
out.
you upload
If you look at
on
BTC
YouTube,
now on the
I will have a
monthly, what are you
review.
seeing
I'll study them now,
right now?
and
We are
align
seeing
my
that the
photos
market has
for
moved
next class.
massively impulsively, right? Boom. This is that our wave. If you go down to lower time frame, you can actually get the count for this wave. And what has this thing given us here now? This is now your A, your B, and your C correction. Is that not so? Now, this C correction, if it is a zigzag, it means it's gonna go down a little bit
Okay.
further. But how
Welcome.
can
Thank
I
you. Cheers.
know
Thank you for your
the
time, man.
level where this thing could actually get down to for you to start buying BTC? I'll do that real quick now using a tool I use right here. This is the bottom of this wave that started moving up, and this is the top right here. Boom. Now you see that this market has reached where I call the golden zone. The golden zone is a terminology. Look it up in the web. Golden zone. The golden zone is the zone between what? The 50% Fibonacci. We have not reached this level yet, but I'm just giving it to you on the fly. At least this is like an expo to know when you need to start packing your crypto again. So 50% and 61.8. What do we see here now? Market touched on 61.8 and it started pulling back, meaning that it's respecting this zone. I didn't mark this zone before. I just did it in front of you guys. If this market, as a matter of fact, any day you open on a weekly, let's go back to weekly now. Any day you wake up and see the weekly ended as a green, please guys, start packing up. Start packing up your crypto. It's going to fly all the way high. But for now, we know that this guy has completed the structure. I'm anticipating any massive move soon. But I'm not going to jump into the market right now until I see that what? Bull pressure in the market. Does that make sense? You don't want to jump in, oh, I'm confident in my analysis. It will reach the golden zone. I cannot enter. Because markets can also correct deeply down to the what? 78.6 zone, which is right here. And if we are in a full bear market right now, which I think we are most likely are, that means, my brother, you're going to be seeing BTC at 20,000 and 17,500 pretty much soon. And when you see it, please start packing. Because within that period, one day, you're going to see a green candle. On a daily candle, start buying up. As a matter of fact, my investors and I, we already left the market at around what? 47,500 in BTC. No, but that's why you don't see me on my chart posting any trades on BTC and stuff or saying you buy. Most of you that have seen my trades in BTC when we're in the bull market, you've seen that it was on point. When I asked people to buy Ocean, they bought Ocean and made over 200% return on Ocean, a coin called Ocean, and many other ones. I bought Matic at 0.3385. Matic moved out to 2.65. You do the math. Over 700, 800 return on investments. All right. Now, don't enter crypto currently unless you are a futures trader. What you be waiting for now is between what? Be selling. Sell, 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 and you go to cash out. Sell, sell, sell until the tide turns again. But for now, I'm currently looking at these zones. Now, this is a very precarious zone, a very strategic zone that the market should reverse. So, if I get something like this, now when I mean market will reverse, watch out. Watch out somewhere when it got here in the first time, when it got to this first zone here. Look at this green candle. Watch out here, guys. Do you see we had a red here now, right? This was on weekly. Boom. What was this? This was a weekly candle that ended green. Is that not so? If you had followed my strategy and bought when it ended green, look at this. This was a massive return on investment right here. This next green candle moved all the way to this high. This was an 18% reward for you. And believe you me, if this candle has ended red in this manner, this is what we call a shooting star pattern. My brother, don't hold on to it. Don't start praying it's going to go up. Sell off everything and look at how it went down. These are patterns are always reproduced in the market every blessed time. All you have to do is to look, listen, and act. All right, guys, the class has taken too much time. I need to rest. It's been a very hectic day for me today. So are there any further questions on this? If there aren't any, I'm going to give like 2 minutes for any interjections. If there aren't any in that 2 minutes, we'll be calling it a day. Any questions? Any questions? Was the information that we've just taught now well understood?
Yeah, what about you now? I don't have questions because I always have a review after the lecture. And through my review, I put up questions.
Okay.
When you upload on YouTube, I will have a review. I'll put it there now. I learn my situation for next class.
Beautiful, beautiful. All right, guys. This is where we'll call it a day for today, and have a blessed weekend and happy Sunday in advance. See you guys in our next section. Bye.
Thank you. Welcome. Thank you. Cheers. Thanks for
Cheers. Cheers.
Thank you.